Marisa, can you tell us a little bit about the ways in which cable operators can find finance is changing? What's good at the moment, and what has changed in the last year or so?
Sure. So if we look back to this time in 2011, we had exceptionally strong markets, and virtually all sources of finance were available to cable operators, whether that be the debt capital markets, equity capital markets, or even the loan markets. But as we moved into the middle of 2011, the public investor community got very shaken, I think, by their concerns about the broader Eurozone. And what we saw was a combination of the public investor appetite waning to a degree, and equally what we were seeing is the impact of some of the regulatory change that's going on in the banking system beginning to impact the private markets, that being the leveraged loan market in particular. And as we now roll into 2012, after a fairly fallow second half of 2011, we've now seen a massive shift in investor psychology to the positive in the public capital markets. A lot of capital has flown out of other asset classes, and now it sits in either high yield bond funds where investors can get some yield, or into other risk assets like equities, where I think investors have largely gotten their minds around the worst case scenario of Europe, and they've somehow baked that into their analytics, and now they're comfortable in beginning to start to take risk again. So that's the positive. So we're starting to see extremely robust debt markets, extremely robust equity markets, and I think the testament of that one is going to be whether or not, or not whether or not, because I'm sure it'll get done, but how the Ziggo execution will happen. But I would say the big shift that we're going to see from now on is that this regulatory pressure that's being put in particular by the Basel III regime means that it's very punitive for banks to be lending off of their balance sheet to the non-investment grade sector, which is effectively the cable sector. So we're going to see a big shift away from loans and into bonds as a lot of these lending facilities mature in the upcoming years. So that's, I think, the real headline is, over time, I believe that Europe will shift much more to 75% capital markets, maybe 25% lending, whereas in the historically it's been exactly the other way.
Okay. And do you expect there to be further IPOs from cable operators in Europe this year?
Clearly the litmus test is going to be the offering by Ziggo. I think Ziggo, my prognosis is Ziggo will go very well. It's a company that's got a great track record. They've performed. They have a little bit of a foray into the public capital markets by virtue of their bond transaction that we underwrote some time ago, and they've met or exceeded every hurdle. So that just sort of fuels investor sentiment. So I think that will go very well. And every time you have a success story, then that fuels more enthusiasm for the sector. So I would think that would be, that offering will be one of the offerings that will open the doors, so to speak. But that having been said, in order to bring a cable company to market, you're going to have the dynamics that investors want, which is sort of a combination of growth and strong cash flows.
Right. And existing sort of private equity owners, are they looking to exit now? I mean, what are the trends there in terms of the private equity involvement?
Sure. I mean, private equity, as we all know, is intermediate term capital. So they have, hurdles in terms of the duration of their investments and their funds. So they will always look to, within reason, exit when markets are strong. And many of these private equity investors who purchased their assets 5 or 6 or 7 years ago are looking at these markets as an opportune time to try to monetize. And a lot of them are coming to maturity of their funds and so forth. So that's driving a lot of the activity. So I think what you'll see, and you have seen over the course of the past year or so, is that private equity investors, as they look to monetize, are going to try to keep their options open. So lots of them have run dual tracks where if the IPO market was there and it was at the right price, they would go IPO. And if it's not, then they might go to a strategic sale. And we've seen examples of both. So last year, KDG was an IPO, or I guess it was 2 years ago now. And we saw obviously a transformational acquisition from private equity going to Liberty Global with Cobble Baden-Württemberg. So you see both. But yes, absolutely, the trend will be there as long as our markets are robust to start monetizing some of those assets.
Yeah. And what are private equity owners and other investors in the cable industry looking for at the moment in terms of the operational metrics and what cable can bring, what priorities cable should have strategically? And
sure.
Does that differ between different investor types?
Yeah, I mean, if you think about private equity, the way they make their returns is in many respects by virtue of their ability to finance creatively and aggressively. So, they need access to leverage. And as a result, they are going to be looking for assets that have a high cash conversion ratio and the ability to service, those higher levels of leverage. So that's a key fundamental tenet for the private equity community. I think for strategics, probably the thing that drives them the most are the synergy potential, to acquire an asset, bring it into the system, very much the Liberty model, absorb those businesses, create the synergies, and create scale and scope, that just furthers their ambition. So I think you almost have to look at the different types of investors slightly differently, although, to a degree they're looking for the same thing. I think you also have to bifurcate the markets, because in the Western European arena, while there's growth, that growth is somewhat moderating as these businesses become more mature. Although, we've heard a lot today about new services, new opportunities with technology to continue that growth curve. But I do think most investors expect that to moderate to some degree. Where a lot of investors are looking now are the emerging markets to find real top-line growth opportunities that are probably where cable was on the Western world 10 years ago, where you have lower penetration rates, you have the ability to go digital, and so on and so forth, and sell further services, and on and on and on. And that's the model that's tried and tested in the West. So I do believe that a lot of investors are thinking that they could replicate that if they find the right assets to buy in emerging markets.
Great. Thank you very much, Marisa.
Pleasure. Okay.